Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good to have you back on. Thanks for making time today.
Happy to be here.
Well, last Friday, stocks on Wall Street ended with a nice gain. Jobs data in the U.S., though, showing that hiring actually plunged. Businesses are having a hard time finding workers because the unemployment benefits are so generous right now, which is ultimately tied to these concerns about inflation we're hearing about. So what's the story in the global markets as we start a new week?
Okay, well, I think it'll be more interesting to start on Tuesday of last week, May 4th, when Janet Yellen, U.S. Treasury Secretary, said basically that if the economy overheats, then the monetary policy can be used to try to bring down the economy. And a lot of people mistook that as a signal saying that interest rate may go up faster than they intended. Now, a lot of economists, when they read Yellen's statement, said that, well, there's nothing controversial about this. She shouldn't have said it because she's a government official, but still there's not something that's very controversial. This is something you learn in introductory economics. But still, the market took that statement very seriously, and we had large fall in Nasdaq of minus 1.9% and S&P down about 1% on Tuesday. And then the market started recovering, and then on Friday, they heard that the unemployment was falling less than they expected. They expected 266,000. They got 266,000 jobs created when they expected 978,000, so that was really large, very much below what the experts had expected. But even though this was a bad economic news, the market seemed to have taken it as good news, because if the economy's recovery is slow, that means the low interest rate will continue much longer. The interest rate will not rise as quickly as some analysts expected. So the market seems to be taking that as good news, and it has led to a stock market price index, stock price increases, not only in the United States, but in Europe as well. So U.S., the market rose on Friday. Europe, the market rose since Wednesday as well. The Asian markets, Nikkei, Shanghai, Hang Seng, they've shown slightly different results in the last week. Nikkei has been up in the latter part of last week. Shanghai has been going down since end of April. Hang Seng has dropped since April 30th to May 3rd, but it has been experiencing a very sluggish price rise since. Today, Nikkei is up a little. Shanghai is also up a little, but Hang Seng is down.
Well, here in Korea, it seemed investors took their cue from Wall Street with, as you mentioned, the reassurances, it seems, that interest rates will stay low, Korean stocks higher for their fourth gain in a row. Retailer investors, it seems, were taking profits, but others buying. Tell us about the local market.
Okay, well, the local market Kospi ended today at 3,249.30. It was up 1.63%. But I think what got everybody's attention was that not only was this a historical closing high, but during the trading day, it briefly went above 3250. So it shows that the Kospi may rise up further in the near future. The increase was led by foreigners, even though they actually bought only 238 billion won's amount of Korean stocks. Institutions also bought. So institutions and foreigners bought while individuals sold. And again, the U.S. unemployment figures seem to be acting as encouragement, saying that the interest rate will remain low for a longer period of time. Kosdaq, it rose by 1.48%. It ended today at 992.80. Foreigners sold Kosdaq stock, individuals and institutions bought.
And now turning to some data, the Korea Economic Research Institute is now calling for GDP growth in Korea this year of 4.1%. Economists at LG calling for 4% as well. These forecasts are higher than the consensus has been so far this year. What do you make of these projections, Professor?
Okay, well, last year everybody's growth projections were in the low 3% range. What we saw in the first quarter of this year was that most of these organizations were readjusting their estimates upwards to high 3% range. But now with LG and the Institute of Finance, we're seeing the predictions go up to 4% range. I think the stronger than expected first quarter growth has a lot to do with it. If you annualize the first quarter growth, it's actually in the 6% range. Now, nobody expects the such strong growth to continue for all 4 quarters, but such high first quarter growth, I think, is giving everybody impetus to hope that growth will be a lot higher than what they thought it would be last year. Now, if you look at some of the details, the consumption is expected to rise by 2.3%. But note that consumption fell by 4.9% in 2020, so consumption will not reach the pre-coronavirus levels this year. And actually, if you look at the Institute of Finance's last projection, they assumed that they projected that consumption would rise by 2.7%. So domestic consumption is not doing as well as they hoped at the end of last year, whereas business investment, they estimated it to be 6.8%, which is considerably higher than what they estimated at the end of last year. And they expect investment to be led by semiconductors. Construction is also up from the last estimate, not only due to SOC construction that they expected from last year, but you also have to remember the government has doubled down on building new apartments at the end of last year and beginning of this year, so that's also playing into this as well. Exports are expected to go by 9.2%, and we are actually doing a lot better on exports than we expected last year, and we were very optimistic about exports last year. So this, I think, is the main driver on why all these estimates are more and more optimistic this year. But they do warn that growth and recovery while it will be faster than expected, it will be very, very uneven. So they should adjust monetary and fiscal policy accordingly. So it'll concentrate more on not providing more growth, but rather evening out the results of the growth so that the disparities will not increase between the winners and losers.
And finally, Professor, it's the start of a new week. Lots of data due out, as always. For one thing, on employment in Korea. What's on your radar in the next few days?
Okay, well, the government budget figures, government budget trends for March will be out tomorrow, and BOK April financial market trends will be out on Thursday. So those will be numbers to watch. But I think globally, everybody's concentrating on the United States because they are at the forefront of recovery from the coronavirus, and they are counting on U.S. to be the engine of recovery for the global economy. On Wednesday, U.S. will announce its consumer price index figures and inflation figures. We'll see if the inflation is going to be as bad as what people fear. You will also have U.S. 10-year bond auctions on Wednesday, so that's another place where we can see how the interest rate will act. And then U.S. retail sales will come out on Thursday, so we'll see whether the U.S. recovery is as strong as a lot of U.S. analysts think it is going to be.
All right, Professor, we'll have to leave it there for today and catch up again later in the week. Thanks so much, as always, for your insights today. We appreciate it.
Thank you.